Hello everyone, my name is Yutaro Ikeda. I'm the marketing manager of Condominium Asset Management. Today, I'd like to introduce a revolutionary service that could change the world, which is P score. It is a service that makes it easy to determine the stability of rents. Do you know real estate investment? Real estate investment is an investment method in which you buy some kind of real estate, rent it out to third parties, and receive rent as profit. To be successful in real estate investment, it is important that resistance do not move out. And this is especially important in Japan, where the population is expected to decrease in the future. And you should know how much income you get from real estate. To know how much income there will be, you have to check the yield. Yield is an indicator of the amount of rental income from real estate investment. Yield is calculated the annual rental income divided by the property price, but the high yield property without occupants is not considered successful. For example, if there are two properties like this, which do you think is better? A can expect a 3.5% yield and is a 5 minutes walk from Shibuya Station and newly built. A is close to Shibuya Station and new developments in areas surrounding this station are expected soon. Moreover, it is newly built, so it's most likely to have a higher rental demand. However, the yield is low for now. Next, B can expect a 3.8% yield and is a 12-minute walk from Roppongi Station and 20 years old. B has a higher yield than A, but is older. And B is far from the nearest station. So it's difficult to judge which property is superior just by looking at them. The issue on judging whether the property is good or bad solely depends on investors' experience and knowledge. The real estate investment market is challenging for newbie investors to enter. And the real estate agents take advantage of the beginner investors' lack of knowledge. So, P score is the solution for these issues. P score is specialized for condominium units and evaluates the stability of rents. Investors can objectively assess rent stability through the P score. In other words, anyone can know whether the property generates stable rental income. Earlier, I asked everyone which property is better. By comparing the property's yield to P score, you can know if the property's yield is really reasonable. P score can be calculated by entering 9 items. Let me show you a demonstration. And P score is calculated between 0 and 5, and higher number is better. So first, let me check property A. First, enter location, nearest station, and distance from station, and building age, and exclusive area, and location floor, and the condominiums brand. Last, rent per month. So A's P score is 4.23 and the yield is 3.4%. So the demo yield is close to A's yield of 3.5%. Second, let me check property B. First, enter location and the nearest station. And distance from station, and building age, and the exclusive area, rental status, location floor, condominium brand, last, rent per month. On the other hand, B's P score is 2.37, and the yield is 4.28%, so it's far from B's yield of 3.8%. As a result, we can see property A has a more appropriate yield and stable rent. In addition, it is common for real estate investors to use their own line of credit to purchase real estate. A line of credit is how much you can borrow a loan. When evaluating profitability, financial institutions set their yield standards based on area and rent line, also taking market conditions into consideration. P score is already able to calculate valuations or accurate estimation of properties that are generally consistent with the yield standards of financial institutions. This means that in the future, P score can not only be used as a guide for decision-making of the investors, but also it has a room to be incorporated into the screening process of financial institutions. So, here are some of the benefits of using P score. First, real estate investors can invest peace of mind. Second, financial institutions can optimize their financing decision. As a result, both real estate investors and financial institutions can expect to reduce opportunity losses in transactions. Transactions can be expected to go more smoothly as the appropriate valuation of condominiums becomes more visible. By using P score, we aim to realize a three-way win-win situation for real estate investors, financial institutions, and real estate companies. Thank you for your attention.